Welcome to another episode of the No Money But Dreams podcast. Today we have a very special guest, Loulou Khazen, who has her own podcast, which is one of the most successful podcasts in the Middle East by now, English speaking. And I'm really looking forward to dive into a number of different topics around entrepreneurship, investing, startups here in the region, and get your view in what is a really interesting time. Obviously, we're in a down market, and it's much more challenging than if we had this chat 2 years ago. So why don't you give us a little bit of a background into who you are and how you got to today?
Sure. So I've been in Dubai for 20 years. I'm originally from Lebanon. I started my career here. I did 6 years in corporate. Then I left and I went into the startup world. So this is back in 2009. Initially, I worked at a startup, like a boutique startup advisory firm. And then I launched my own company, which is Nabish, which was the first and largest online freelance marketplace in the region. Grew that company over 8 years, and we sold the company in 2020. In 2019, I started investing in startups with a few friends. That group became a 200 investor network called Spade Ventures, where we invest in early stage tech startups in MENA, $500,000 to $2 million checks. And I also have a podcast, Conversations with Loulou, where I interview startup founders, tech leaders, business leaders from the region. And we talk about their insights and their learnings. And it's a way to give back some of the learnings I've accumulated over the past 20-year journey here.
Yeah, that's amazing. I mean, that was, you have clearly done your elevator pitch a number of times. 20 years in a minute.
Form.
Yeah, exactly. Let's delve a little bit into, I think there's so much that can come out of this, especially, let's start with your entrepreneurial journey. How did you decide to kind of go from corporate into doing your own thing, and what was that switch like? I mean, it was a number of years ago now that you started it. If you remember back then.
Of course I remember. It was easy. There was a global recession. It was the global financial crisis in 2008, and I lost my job, like a lot of people. So I didn't really need to think about it a lot. It just came to me on a plate, So end of 2008, it was the time when I thought, it's trying to find a job is not the thing for me. I wanted to create my own job, and serendipity makes it that you end up meeting people who are on a similar path and similar journey. And this is how I met Salam, who was running the startup advisory firm. And I worked with her for a couple of years. It wasn't a hard decision. Let's put it this way. It wasn't that I had a fantastic job and I was growing and being extremely fulfilled and financially rewarded. It wasn't the case. So it was a relatively easy decision for me.
You had little to lose back
then. Exactly,
yes.
Actually.
And now looking back at the time, what were kind of the things that you really learned from that experience that stick with you till today, that help you with the investing journey now? Because now you sit on the other side and you're investing, so you understand the entrepreneur a lot better because you've been on both sides of the table.
So the learning experience in terms of
just the hardships that you had to go through to overcome, to kind of pull through and be successful by the end of it.
Okay, so if you're talking about my learning experiences from my entrepreneurial journey, definitely it was a crash course in how to run a business, how to build a business, and all the ups and downs. It was a completely different environment back then than it is today. When I was fundraising for my company in 2012, 2013, there were really no VCs. I think there were maybe a handful across the entire region. There was no startup scene per se. It wasn't a big thing. There was no accelerator. There were no accelerators, incubators, programs as much as you have today. So I think we were all learning as entrepreneurs, as investors, as stakeholders as well, government. Everybody was building this ecosystem together. So I would like to say I'm kind of part of that first wave of entrepreneurs that had to do a lot of the learning. the hard way. And the journey continued. I mean, I had challenges with hiring great people, finding great people at the time, especially on the tech side, right? Our region doesn't have an abundance of tech talent. Obviously, now it's changing, but it was very, very difficult at the time to find the right people. Also, understanding all of the sort of the kind of governance type of thing side of things. So, for instance. What is an employee stock option pool? What is a vesting schedule with your co-founder? Things like that. Obviously, I had to learn it the hard way. So lots of challenges throughout the way, for sure. Hiring, building team, fundraising throughout the journey was very challenging. Culturally, was challenging as well. The market. I mean, I was one of the first people talking about freelancing, where really freelancing wasn't very much on the map here, at least in a formal capacity. There was no platform for freelancers. So being first as well comes with its own set of challenges. So there were these cultural challenges as well. I don't know, there's lots.
Now that you sit on the other side of the table and are investing in startups, tell us a little bit about your selection process, who you give time to, and how you find great ideas here in the region.
So we do focus on the region. So anything outside of the region is out of our focus. We also focus on software companies. So anything that is not tech enabled, let's say, is also outside of our scope. Giving time to the right people is actually very, very challenging. I tend to speak to people that come in recommended. It's always easier to have someone vouch for an entrepreneur, especially someone that I have a relationship with and I trust. So I get leads from other VCs. I get leads from obviously my network. With the podcast, there's a lot of exposure basically on what I'm doing. Even though I don't talk a lot about Spade Ventures on the podcast, but I still get quite a bit of deal flow that way. But always someone recommended has like a higher priority. Sometimes people pitch me on LinkedIn. I do respond, but I think the likelihood of that turning into a meeting is very unlikely unless they're really building something very special. And I try to. And I get a lot of emails, and I tried to put it on LinkedIn the other day, what's the best way to write an email to an investor, especially if it's like a cold outreach. Because sometimes you get emails that are super long and super lengthy and no one's going to read it. I'm not going to read it. So there's also, I think, an art of approaching somebody. And I think you need to think about it as if you would approach someone in real life. So if I meet you and I want to pitch you, I'm not going to come and say, hi, Tariq, my startup is X, I'm making this, I have that, I'm not going to sit and hold you for 10 minutes while I throw data at you. And I think it's the same thing through email or online. You need to kind of build somewhat a relationship or at least get an initial interest before you dump all the information on an investor.
Yeah.
I think so. Go back to your answer. I mean, to your question, it's mostly people from my network, mostly people who get recommended, entrepreneurs that I've invested in that recommend other entrepreneurs. So it's a close-knit kind of circle.
Yes. Okay. I think that's in line with all the other people around the world that tell you, you better work on an introduction. That's much better a time invested than trying to go and cold outreach to someone. So that makes a lot of sense. Now, there's a buzzword out there with AI for 2023. Do you see the same kind of every startup turns into an AI startup and it pitches you some kind of AI story? Or what kind of deal flow do you see at the moment?
So I'm seeing definitely more deal flow with kind of AI enabled, right? So I had a discussion with Philip Bahoshi recently. He's the founder of Magnet on my podcast, and he said something which I found very interesting. Like, there's no really AI company per se. There are a very few just pure AI companies. There's a company that's AI enabled, right? So they're leveraging artificial intelligence to get something done. So I'm definitely starting to see more of that. I haven't done any investments in AI yet. Well, in
pure AI company.
Pure AI, yeah, for sure not.
Yeah.
But we have some of our current portfolio companies obviously leveraging AI a lot and looking at ways to leverage it even more in their operations and the way they serve their customers. But I haven't made investments recently in companies that are leveraging AI. Not yet, anyway.
And what sectors at the moment interest you, or do you see a lot of interest or founders that are pitching in? Because you have the whole F&B kind of thing that went on for the last kind of Kitopia and the like.
Yeah.
Where do you see a lot of attention being put to at the moment by founders?
Yeah. So when I look at investments, I also consider the types of people we have with us in the syndicate, because there's a lot of like subject matter expertise, and we tend to kind of invest in industries where we feel that we can add value. We don't like to be just a check. We leverage the network to open a lot of doors, and that's actually the value of a syndicate. So, for example, we have people in fintech within the syndicate. So we tend to, we've done most of our investments in fintech, at least the most recent investments. We do marketplaces. This is something I've built before, so I understand quite well. We do a lot of B2B type services as well, because we feel that throughout the network we can open doors. We have access to government, we have access to enterprise companies, etc. So everything where we feel we could leverage to open doors is kind of where we invest. So if I get something totally left field that I don't feel we can add any value, I would tend not to look at it. I wouldn't even know how to DD it anyway. So I think something where I understand as well is very important.
Yeah, that makes a lot of sense. You started talking about your podcast, and that is the next area where I want to talk about, because your podcast, I've listened maybe to now, you're on
57.
57.
Yes.
I've probably done 15 now.
Okay.
So there's a lot of value, especially when you're interested in the region and trying to understand the region and trying to understand what people have successfully done, the likes of Kareem and others that have been on the show. Tell us a little bit about your journey as a podcaster and where you see your podcast kind of going next.
Yeah, so the podcast was like kind of a COVID baby. So I just exited Nabish and COVID hit and there wasn't much to do, right? And I thought, I've been in the UAE for close to 20 years at the time. I've worked in I've had different careers throughout that time. I have a great network of people, and most recently I met with some amazing entrepreneurs. Why not do something and share insights in a way that is a bit more casual and slightly more candid and less scripted than what you may find if you interview an entrepreneur on Forbes or on Arabian Business, where they have like certain talking points and they want to try to sell you their business. So the idea was, I don't want you to come and talk to me about your business. I wanna share insights. Initially, actually, I started with journeys, so entrepreneurial journeys. I kind of wanted to model it after How I Built It, which is a famous podcast, and then I thought, unless you have like a seriously amazing journey, and also it requires a lot of research on my end. So if I want to talk about your journey, I probably need a big team to research like your background and figure out what happened, because you're not going to tell me, right? So I thought it's probably not the best format for me, especially as I'm doing, I'm kind of bootstrapping the podcast and I'm doing it all on my own. So I moved into insights. So what I'm interested in today is like, tell me your thoughts about, this topic, or your thoughts about this industry that you're in, or share some insight about how you grew your team from like A to B, how you fundraised, how you exited. So I'm more interested in insights that we can share, things that are actionable, that people can actually listen to and think, well, you know what, that's a great idea. I can maybe implement this in my company. And also the audience is not purely startups and entrepreneurs. So I do want to kind of reach people in the corporate world who are looking to make that jump into entrepreneurship. So I try to make the language more accessible. So initially when I started, I remember, we would be talking like startup lingo and VC and I don't know what. And then one day my brother writes me and he's like, what is a VC? And I realized, I'm like, okay, interesting. You would assume that everybody knows these terminology, but I am reaching a wider audience. So it needs to be simplified and explained. So now every time I have someone, when it gets too technical, I try to like explain what the terminology means, etc. So I want, on my website, I say I want to inspire the next generation of leaders, and I think this is really the goal. Whether you're an entrepreneur trying to scale, whether you're someone getting started looking for advice, and whether you're someone who's in corporate who is looking to make that jump, hopefully you'll get inspired as well.
That's really powerful.
Yeah, that's kind of how it evolved over the years.
Yeah, I remember a LinkedIn post where you asked whether you should do it in Arabic or not.
Yes.
And today I saw a LinkedIn post by Stephen Bartlett, who is the Diary of a CEO, who has released it in Spanish using AI
on Spotify.
Yes. Are you still thinking about doing it maybe in Arabic? Maybe will you use AI to do it in Arabic? What's your thoughts?
The challenge for me in Arabic is I know that it makes sense to do it in Arabic from a reach standpoint and from a growth standpoint. But also, like, I'm not doing in a way, I'm not doing this so I can get the most reach. I'm doing this because I enjoy it. I'm doing this because I feel more comfortable speaking in English, especially when we're talking about technical terms, which I find very difficult for me to do in Arabic.
Yeah, and maybe also the guests, right? I mean, they may not be Arabic speakers, and it will be even more complicated.
Yeah, so I explored this thing. I mean, should we do one in Arabic, one in English, or depending on the guest or something? I mean, these are all ideas still at the table. I haven't ventured into Arabic yet. Every time I bring in a guest from like an Arab descent, they speak English very well. So we kind of never really had the reason to do it in Arabic.
Yeah.
I mean, maybe it's wrong, right? Maybe it's excluding a lot of people that would otherwise benefit from it. But I also do feel like English is a very, it's a universal language, and a lot of people. I mean, I think if you look on Google search trends and keywords in Arabic, learn English is probably one of the highest most searched term in Saudi Arabia, for example. So
and there's a very successful podcast on learning English.
Yes, I think so. I heard that. Yes.
Okay. So let's switch a little bit to someone, for example, that is still in the corporate world, has an idea and has industry experience, and is kind of like on the fence of whether to go on this journey of becoming an entrepreneur. What kind of advice would you give someone like this?
I think it depends on where they are in their life as well. I mean, if they are younger, without a lot of responsibilities, I think it's definitely worth taking a chance, because you can always, if it doesn't work out, you can always bounce back and do something else, and you'll have a ton of experience. Definitely, I think your financial situation is very important. So when I started Nabish, I used my savings to fund the company initially. So are you willing to do that, or are you gonna go and try to raise money initially from day one? How much sacrifice and pain are you kind of willing to put in it, keeping in mind that if you don't put any of your money, investors might see it as a sign that maybe you're not so committed, or maybe you're not so sure and you're kind of hedging your bets. Now, of course, some entrepreneurs out there will be upset and tell me that an entrepreneur should live and they should have a good life and all of that stuff. I mean, we've had many debates on LinkedIn about this, but I tell you from my experience, it's like you really need to be willing to sacrifice a lot. This is financial, obviously your time, because you're going to work much longer hours. If you have a family, I think it makes it much, much harder because I doubt that like really, really successful entrepreneurs, like really successful, have great family lives. I would seriously doubt that. And again, it's not a recipe for success, but I'm saying it just takes so much. What's the word? Not only commitment, sacrifice, right? That you need to sacrifice so much, basically, to be able to build this company. So, as a person in corporate who is, on the IV drip of salary and insurance and bonus and I don't know, RSUs or whatever you're making, then are you willing to stop that and actually live maybe a year or two without any of that? Can you afford it financially, psychologically? Are you able to do that? Because also, there's society, right? Like if you're a person in corporate, you probably have a certain lifestyle, you probably have certain friends, maybe you drive a Range Rover, I don't know. So are you willing to sacrifice this lifestyle? And then, so these are like the basic things, right? And then comes, okay, you have industry expertise. What else do you need to build this company? What type of expertise do you need to bring in? Are you able to find equally talented people to come and co-found this thing with you? Are you able to inspire people to come and join you on this journey as a team, even when you don't have funding in the early days? So these are all like very, very important. And of course, then you need to be in an industry that makes sense with a growing market. So all the stars have to align to get to the point where you are talking to an investor. Because by the time you're talking to an investor, it means you've done a lot of things in the right way. And if you're talking to an investor before that, it means if you're lucky, you're gonna get funding, but highly unlikely, but you're gonna get diluted. And most likely people would say, is he really or is she really committed to this? I mean, you have to have skin in the game, right? And it's also, again, for the people that will jump on this and be upset, it's proportional, right? So if your net worth is, I don't know, 100,000 dirhams, maybe you're putting 10,000, but you need to have some kind of skin in the game. And your time alone is not enough.
Yeah, that's really good advice. What do you think on people that just pitch an idea? Because I presume that's most people pitching just an idea, and people that actually show you, I've got some kind of traction, even if they just come with a very basic MVP or they've done something beyond a pitch deck and an idea.
Yeah, I mean, I don't think I would sit with people who are just at an idea stage. We're not an incubator. Incubators are usually those that will help you take that idea and kind of commercialize it in a way or another, build that minimum viable product and get you from like A to B. But again, by the time you're talking to investors, you've probably done quite a bit of that. Definitely you need some form of traction, right? So now in this environment, a path to profitability is very important. Revenue, I mean, a proper business model, revenue generating business is very important. If you're not revenue generating, then you should at least know and have tested some revenue streams, and you have a fairly good idea in terms of how you're going to be making money. Test all of your assumption, the pricing, what are you going to charge the customer, how much is it going to cost you to acquire that customer. So there has to be some form of exercise basically that shows that I am able to get customers through these channels and it's costing me this much and this is how much I can make in return. So revenue is very important. A path to profitability is very important. It's not like I am spending 10,000 to acquire a customer who's going to pay me 5. So also that's very important. What else? Yeah, I mean you have to have a demo, obviously, some form of a product, right? Because you need to be able to demonstrate that you are able to put a team together to kind of build this thing that you're envisioning. It's not just an idea on paper. Validation from early clients, early customers, right? If it's a B2B product, have you spoken to any companies? Have they expressed interest? What did they say? Did they use it? Are they co-creating with you? Maybe you are like, we met a company in Saudi, they are literally building an enterprise product with a couple of enterprise clients. So they're kind of co-creating this together. So what's the validation basically in terms of where's the demand, the validation of the demand? Team, super important. Who are your co-founders? Who's your leadership team? What's their industry expertise? Where do they come from? What's their track record?
Yeah, I mean, this brings me to the next point. I mean, you said you called yourself one of the first wave kind of founders, and we're probably now in the second wave. But the region is still lagging behind when you look at other kind of regions in terms of how many successful founders there have been and how many people have worked in the startup world. So ultimately, you probably get pitched by a lot of first-time founders, and there's always this first-time founder risk element. How do you try to hedge your bet there? You've kind of answered part of it in your previous answer, but how do you look at a first-time founder?
With a lot of love and respect, because I was a first-time founder myself. So I think it's, for someone to take that jump is very important. But it's very important to kind of understand how serious this person is about the startup. Is it really, are they all in? How much are they losing if this thing doesn't work? How committed they are? Again, their personal circumstances maybe also play a role. Where are they in their life? Again, their ability to build a great team, right? So maybe they're a first-time founder, but maybe they found some amazing co-founders that may have experience. Maybe they've built an advisory board that's amazing of entrepreneurs that have done it, or some very kind of heavyweights when it comes to industry experts. So I think there's ways you can hedge for that risk, right? So you can build a good advisory board. You can have a very good angel investor, for example, who also becomes an advisor. Other co-founders who have done it before. Maybe some key people on the team and the leadership team that may have experience in big startups before. I mean, there are now quite a few big startups that have a huge alumni network, right? So I see it a lot today in Dex, where you have co-founders, and let's say the product guy is like ex-Kareem or something like that. So I mean, if you're smart enough, right, you'll find a way to build that team that kind of covers for the fact that you don't necessarily have a lot of experience in founding businesses, and of course your personal track record, right?
Okay, that makes a lot of sense. Another thing that I picked up by listening to a bunch of different podcasts is that other VCs talk about a first-time founder will always focus on product and trying to add features and make the product as great as possible. And a second-time founder looks much more at distribution and how he can get his customer acquisition costs lower, and that kind of. How do you see that here? Are people focusing a lot on product, or is the distribution, because the UAE is a fairly small market, when 10 million people. How do you think about the trade-off or the thoughts behind product versus distribution?
I think as long as the product can do like the minimum functions that it needs to do, I think that's acceptable. And then I think the distribution is very important, because finding a market for that product is extremely important. It doesn't matter if you've built this really amazing thing and no one's buying it, or no one's using it, or they want to use it in a different way, and then you've already spent all your money building something that maybe no one wants to use or knows how to use. So I think and that's the concept of lean startups, right? So you have to build something like a very lean product, a minimum viable product that does the basic functions that you need to do, and then keep iterating and building on top of that. Now I agree, though, it's that I think first-time founders, maybe, I don't know if it's only first-time founders, but I do feel that sometimes like non-technical people would maybe think a lot about adding features if things are not working well. So they may see that it's not selling as it should or something like that, and then they tend to think, oh well, we need to add more features and maybe it will attract different customers or something like that. And obviously that goes against advice usually that is given to startups, is that focus, right? Focus on one feature, build it, do it really well, and don't build a lot of like bells and whistles. There's a famous investor called Dave McClure. He used to come to the region a lot, and basically he used to say you need to kill features. So if you've built a lot of features, just kill some of them that are useless. So yeah, I mean, I think distribution is very, very important. Understanding how you're going to sell to your customers, where to find them, how to acquire them, how they're using the product. I think that's much more important than getting an excellent product basically out there first. I don't think it works that way. Unless, again, your product is like, has a critical life or death type application, right? So if you're in the medical industry or something like that, yes, obviously the product needs to be great. But if you're in a software business, I think life will go on if your web crashes or a page doesn't go where it's meant to.
Okay, that makes it, yeah, iterating makes a lot of sense. What are some of the red flags for you personally or for the syndicate where you say these are things I will stop and not invest in someone?
Definitely, the team is very important. How many co-founders are there? And if there are no co-founders, right, like who is the leadership team? What does the cap table look like at that point in time? So how much equity do the main players have? How is it divided and distributed? I think that's very important because that could tell that there might be trouble brewing like in the future. I think that's super important. So a red flag would be is if you feel that one of the co-founders is not like properly incentivized, but they're more critical to the company. So that would be a red flag. Spending too much money in areas that maybe doesn't necessarily need to have that much money spent in. High founder salaries, for example, I think is a flag, right? If you are trying to put yourself a market rate or maybe even 20-30% less than market rate, I still think it's a lot, because going back to that skin in the game, right? I mean, what are you sacrificing here? What are red flags? I mean, who are you talking to in terms of investors as well? Did anyone invest? If not, then why? That's a red flag. What else? How you deal with me, right? How does the communication go? Are you very pushy? What's your communication style like? I mean, that could also be a red flag, because as a founder, you are primarily selling your company all the time, and if you don't know how to talk to people, then it could be very challenging, especially in the early days. Mm-hmm.
Yeah, that's a very good answer. It's all human aspects, how people deal with each other. Yes,
because we're investing early, right? So of course, I mean, again, is it a big market? Does it make sense? Is the problem big enough? I mean, if you tell me, I don't know, I'm building whatever, green plastic cups, right? Do I really need to have this product? Is it
a company that needs VC investment, or is it just a company could go on by itself?
Yeah. That's a great point, actually, as well. Yes.
And then, you talked a lot about co-founders and kind of the team. What do you think now? There's this whole low-code, no-code environment. I think there's a lot of non-technical people out there that are thinking about maybe starting their own venture and then thinking about, do I need a technical founder, especially in a region where we're not known for having a lot of technical people. How do you see that whole thing kind of playing out? Have you followed, on GitHub, more than 60% of the code is now kind of AI written and stuff. So what's your views on that?
Yes, you need a technical co-founder. I think we're not there yet, right? I mean, we're not there where you can build a full product using different AI tools and stuff like that. I think you really need somebody that understands technology, understands the how to build the right infrastructure, how to again, I don't want to talk things I don't understand, but basically, I do feel that you definitely need the technical expertise, especially if you are a tech company, and if you have the wrong people, you're screwed. I mean, you really need to have the right person as well.
Yeah, and then if someone then decides I want to raise money, people obviously. The easiest thing to kill a startup is they run out of money, right? So the question that comes out of that is how much money should they really raise, right? What's your viewpoint on that? Because I'm sure that you've seen some crazy stories.
Yeah, so I think in today's environment, obviously things have changed a lot. So you definitely need to raise only as much as you really need, like and not more, because actually, there's two kind of thoughts at the moment, right? There's one thought that is, but again, this is not local. This is more global. Raise money to kind of have a runway all the way up to like mid 2026. So this was like Chamath Palihapitiya, was a famous investor, and he said things are going to be very bad. High interest rates are going to persist. You need to have a cash runway till mid 2026. So you need to be raising now. There's also, the other side of this is that raise, as much as you need and not more, because you're probably not going to be able to raise at the same valuations that you did last year or the year before, and you're going to get heavily diluted. So do you want to take on that bigger dilution to build that runway? Or are you close to profitability, or are you close, to what they call like default alive? So like the business basically becoming profitable very soon, and you only need like $1 million to get there, and therefore I will just raise that $1 million, or $1 million plus like 20% again as a buffer. I don't know. There's no kind of right or wrong. I mean, I know companies that we've invested in that are constantly fundraising, so they're constantly trying to build that runway. I know a company that we invested in the US that raised a huge round, and luckily, actually, they did, because they can now weather the storm. So they raised it beginning last year, I think, before kind of things really turned ugly. So now they have this long runway that they can use. But again, valuations in the US are not like valuations here, right? So they were able to raise $40 million at $150 million valuation. I mean, if you're able to raise that much money here, then great. But I think it's much more challenging. So I think the dilution would be much, much higher.
Yeah. You talked about a challenging environment. I want to get your viewpoint on that specifically. 2023 globally is a difficult environment for startups.
Yeah.
Tell us a little bit, or give us some insights on the region and how it's playing out here.
Yeah, so I think, globally, as you said, investments are on the decline. I looked at some numbers. I had a talk recently, and I just wanted to see the trend. So in 2021, globally, you had 766 billion invested in venture capital on a global scale. In 2022, that was 540, and so far in H1 2023, it's 174. So it went from 700 to 500 to 174. So definitely, in this part of the world, it's the same. I mean, if you read the Magnet reports, it's definitely down. I think Philip was saying it's probably going to be probably around like the 2019 levels. So not a lot of money is going into venture. I think investors who have raised funds are not deploying as much as they need to. Even though there are, opportunities, potentially there are probably a lot of companies in distress. I mean, again, Philips said that they ran a survey over 8,000 startups here in the region, and 15% have shut down since the past 12 months. So there is opportunity to potentially invest in or buy startups at this point, but it's not really happening. Are the companies, are the startups, good enough for them to be purchased or acquired? That's something to consider. But yeah, the story is basically people are holding on investing.
Yeah.
And I still think there's a lot of money in the region. So you have 4 of the top 10 largest sovereign wealth funds in the world here in our part of the world. That's around $3 trillion, in kind of assets. And I know that there is a very big drive when it comes to governments trying to push entrepreneurship. I mean, especially in Saudi Arabia, you see a lot, and also in the UAE. So why aren't we seeing more money in the market is something that no one is able to answer. I understand that for the funds that are trying to raise now, it could be a challenging environment because maybe, limited partners might be looking at other asset classes, but for those that have raised funds, I'm not sure what is going on.
Mm-hmm. And personally, so you gave us a Middle Eastern overview.
Yeah.
But personally, and with Spade Ventures, what's your kind of process at the moment? Are you still actively investing?
So this year has been super slow. And the reason with us as a syndicate, it's different, right? So syndicate members are individuals. So this is basically, someone who is putting in, a $20,000 check or $30,000 check into VC, probably doing 2 or 3 investments per year. So this person obviously has, again, with the current market conditions, right? Maybe people have lost jobs. Like we know a lot of tech companies, for example, have let go of people. It could be their payments have gone higher because the interest rates are higher. It could be that they're finding other ways to invest their money and get a more lower risk type return. I mean, you have a brokerage firm, so you probably maybe see those trends.
Mm-hmm.
So not many people are interested in venture at this point. So, and because I deal with like these accredited investors, but they're all individuals, I'm not getting a lot of traction. Basically, there's not much interest on their part to invest. But again, it's different dynamics from a fund. Like in a syndicate, we are doing every investment as a standalone investment. Mm-hmm. But when you're a fund, you have these funds already. So we are definitely much more impacted by what's happening globally. Mm-hmm. So it's been a super slow year, to be honest.
And is that on the investment side, also on the deal flow side, or just more in taking new investments?
Yeah, more on the investment side. No, I mean we're still seeing deal flow. Definitely, there's definitely a lot of deal flow. Yeah. Entrepreneurs are still there; they're still building things, but yeah, more on the appetite. So, which is sort of interesting because usually the angel investors and like syndicates like us, and for example like Dubai Angel Investors, we're sort of like the first or second check in a startup, and we're very crucial. Like before that startup has enough KPIs to be able to go to that VC and raise more money. So if we're like slowing down investments, then it's really worrying actually, and that's something that worries me about the startup ecosystem here.
And we're probably in an environment where interest rates going to stay higher for longer. Mm-hmm. How do you see the rest of 2023 and kind of 2024 play out for the region?
Yeah, so I think there's still the ripple effect is still in process at the moment. I don't think we have bottomed yet. Philip said we're at the bottom of an 8-year cycle in VC. I don't know. I think time will tell. If you listen to what people are saying globally, people are saying next year is going to be terrible as well, same as this year. So maybe even worse because there's talk that maybe the consumer, like the end consumer, hasn't been hit as hard yet. Mm-hmm. So I definitely think next year is going to be very, very turbulent, and it's going to be very, very challenging for entrepreneurs, especially those like the ones who are fundraising, who are sort of in the very, very early stages. Maybe they can wait a little bit or pause things. But those that are like, post-Series C, post-Series A, who are already building and need funding, I think it's going to be very challenging.
that wasn't the best note to end the episode. So let's end it on a positive.
Okay.
What are the things that you would leave an entrepreneur with, someone that is already with a venture and is going through these tough times?
Yeah.
Maybe something from your own kind of times before where you struggle with all the similar things that they are struggling
Yeah.
with. What kind of would you give as advice to kind of hang in there and get through this?
Hang in there. I mean, look, I said it in my talk in Cyprus now that failure is you know is part of the journey, right? It's and I say it now easily, but definitely it's not an easy thing, right? Especially as you go through it, but it's definitely part of the journey, and it's gonna happen. And if you zoom out on your life, and you will see it's just literally a small blip, a small moment in time, and then life goes on. I mean, I've faced a lot of challenges, and every time I think this is the end, and I feel very personally, especially when you're an entrepreneur, you're very personally invested. You're all in, right? If you were all in, which is how I was. And it's very painful, but it's normal, and it happens. And I think you just need to understand that sometimes there are external factors at play that you may or may not have control over. And that you need to hang in there, but you also need to be smart, right? I mean, if your cash burn is very high and you are seeing all these signs and you're not doing anything about it, then obviously no, then not hang in there. Then you need to be doing something, right? If you see the warning signs and you don't do anything about it, then obviously it's on you. But yeah, you need to, it's part of failure, it's part of the journey. Nobody wants it. And maybe try to find, if you're really in deep trouble, like try to find an exit opportunity or something. It's not a positive note. I don't know what to say. I mean,
This was much more positive than the one before.
but it is, I mean, you need to hang in there. And ultimately, I think you have to have a clear conscience and say, I've given it everything. I've done everything I can to the best of my abilities, and it didn't work. And then then you should be okay. But if you feel that you didn't really give it your all, if you were slacking, or if you didn't really give it a fair chance, then it's on you.
Yeah, that's a very good last talking point. Thank you so much for coming on the show.
Thanks, Tariq.
I wish you all the best for your podcast. Anyone that hasn't listened to it, go and check it out.
Thank you so much.
You'll take a lot of great nuggets away from it for sure.
Thank you.
Thank you.